How's it going, everyone? Cameron Lombardi back here with another stock market investing video. Today we're going to be discussing one of the largest tech companies that there is in the stock market, none other than Google. And we're going to be discussing how you can earn money just by holding shares of Google by selling covered calls. So before we get too deep into the video, if you guys want to get started on your investing journey, the first link in the description is a Robinhood link. And by clicking that link, you can earn yourself a free stock to get started. All right, guys, so let's get right into it. So as you can see today, we had a little bit of a downturn in the market and now it's slowly climbing back up. But I want to go to Google here and show you guys kind of my position. So as of right now, I own 100 shares of Google, or just over 100 shares, and my average cost is $107.71. And now I'm going to go down and show you kind of my history of buying Google. I've been averaging into it for a long time, just a little bit at a time over a long period of time. And as you can see here, just little purchases here and there. And over time, I've just kind of averaged into the position. And like you saw up top there, my average price is $107.71. So I want to show you guys a covered call that I made this week and one that I have currently for Google and how I'm using Google to earn passive income. Okay, so let's take a look here at this Google $108 call that I sold that expires this Friday. So I actually sold the call at the end of last week. As you can see here, filled on April 28th. It's one contract, and I sold it for $1.09 a share. And remember that each options contract is executed at 100 shares, so $1.09 per share equals $109. And that's for about a week since I sold it last Friday, and it expires this Friday. So again, I got a total of $109 for selling that call. So if we take a look at my next order here, Google actually had a little bit of a dip this morning, and I ended up buying the contract back for only 26 cents per share, or a total of $26. So just on that play alone right there, I made $83 because I sold it for $109. I got that $109 immediately, and you get to keep that no matter what. But then I bought it back for $26 a share as it dipped back down, and now Google stock has been coming back up. And as it came back up, I went ahead and I sold another covered call on it for the same strike for the same day. And I ended up getting a few more bucks for it. So not too bad of a deal here. Another $32, and it's for the same thing at $108. So if you total the two covered calls that I sold, I'll end up making $115 this week just by selling covered calls on Google. Okay, and so if we scroll back to the stock here and come back up, you can see it actually has gone up since I sold this covered call here. So it's saying that I'm down $8 for the total return. I'm really not down anything. I just could have sold it for more and made a little bit more money. And as it moves, you're going to see that price move as well. Right now, the stock's hovering around $106 to $107 a share. And if it stays right there, that's perfect for me. As long as it stays within that $106 to $108 range, I can keep my shares and I can keep selling more calls week after week. And so the goal for this is to earn somewhere around $100 to $120 a week. And if you can do that, you're going to have a great return, because that's about 1% or a little more every single week. And if you can get that, think about it over a year, right? That's 52% in a year if you do it every week. So that's an excellent return and a great way to earn some passive income on a stock that you're just holding, right? So again, you have to have 100 shares of the stock in order to do this. So it is a little bit of an investment, but I just look at it as parking a principal investment and then earning rent on that investment. And really all you have to do from there is just click a few buttons, know a little bit about what you're doing, and you can just earn passive income like this every week. So if we total that out over the course of a month, it's somewhere around $440 a month. So if we go over to our calculator here and calculate that out, and we divide $440 a month on average, divided by our initial investment, times that by 100 to get a percent, that's about almost 4.1% per month. So now let's go back over and look at Google again. So guys, I can't emphasize enough that you should only do covered calls on stocks that you don't mind holding, right? Because if Google drops to, let's say, $100 a share, I may not be able to sell covered calls on it. If we go into the options chain here, you can see for next week, I can sell another covered call at 108 for $151. And this is expiring next Friday, or I could even do $109 and I would get $109 for that one, as it just changed. So you really want to do this with a stock that you're comfortable holding, right? Because if it drops down low, I'm not going to be able to sell a covered call, $6 above where it is right now for very much money. I mean, you're looking at maybe $36 there for the 112. So you have to be comfortable holding this stock even if you're not selling covered calls on it. So for me, I like to have stocks in my portfolio that people use every single day, right? Obviously, Google is huge, not only as a search engine, YouTube, cloud advertising. They're just absolutely a huge company. They're not going anywhere. So I'm comfortable holding the shares. And one other thing that I like to look at when holding a company is their cash or their assets to liability ratio. And to do that, I like to use a different stock app called Webull. And so if you pull up Google and Webull, you can go to the company tab here and scroll down, and it'll show you some really useful information like earnings per share. You can scroll through some different key indicators here, their income statement to look at their net income, their total revenue, operating income. Or you can scroll down, in which I like to look at. One of the most important things is their balance sheet, and it shows their assets to liabilities. And as you can see here, the blue bar is the assets, the purple bar is the liabilities. So Google has way more assets than liabilities, right? They're cash heavy. And what this means is if there is a recession or a pullback in the market, Google is going to hold strong. They have plenty of money to cover all of their liabilities. Webull also has a nice other tab here where you can scroll over to analysis, and it just kind of gives you some analyst price targets. The average is around 129.64 with the high of 190 and a low of 104.70. So even at the low point there, 104.70, that's not too far off from our target price. So this is all good information and what you want to see if you're holding 100 shares of a company, right? Because it is a significant investment. It's over $10,000 to hold this. So you do want to make sure that you're using companies that have solid balance sheets, and they're a company that is used every day. So going back to Robinhood here. So if we scroll down now, you can see Google is coming down a little bit. So my covered call that I just sold here is almost even now. So if I wanted to, I could buy this back and sell another one for next week. I could go to May 12th and I could collect $128 for selling another one, and that would expire next Friday. But I'm going to hold on to it here and kind of let it hold till either Thursday or maybe even Friday, and I'll buy it back and then go ahead and sell another covered call for the next week. Something else that I've started that I want to show you guys, I started a little Excel sheet here, and Google's going to be our first play on the Excel sheet. And as you can see, I kind of have it divided out here by week, symbol, strategy, the collateral, premium that I've received, a total percentage, a profit and loss, and a weekly percentage profit. And so as you can see, I have that first play typed in there. It's the week of 5/1/23. It's Google. It's the covered call that I sold. My collateral was $10,771. And that's just my total cost of owning 100 shares. The premium that I sold at first was $109. I made 83 of that because I bought it back for 26. So that was about a 0.77% return on my money. And then I have another one entered here for $32 that I sold. And as this one plays out, I'll enter in that information. So as I get more stocks that I'm selling covered calls on, or if I'm selling cash secured puts, I'll enter them in here. And then we'll do monthly totals and kind of see how the account's growing. So that way you can follow along and see how this strategy really does help an account grow over time. If you want to continue to see more videos just like this, please like the video, share it, subscribe, because I'm going to be making more videos so you can see this account grow over time. Thank you guys so much for watching. I hope you guys all have a great day, and I'll see you in the next one.